In the 16th century, Spain stood at the center of the world. From the silver mines of Potosi to the jungles of the Philippines, the Spanish crown commanded an empire so vast that its monarch, King Philip II, was said to rule over lands upon which the sun never set. Mountains of gold and rivers of silver flowed across the Atlantic. Each year, treasure fleets sailed from the Americas to Seville, carrying the unimaginable wealth of Mexico and Peru. Spanish galleons glittered with coins, jewels, and ingots, physical proof that Spain had conquered both the old and the new worlds. To Europe, it looked like the ultimate triumph of empire. To Spain, it seemed as though divine destiny had made it the richest kingdom in history. But behind the glitter and facade, a quiet economic disaster was already taking shape. The Spanish crown mistook treasure for wealth. It believed that silver alone could sustain an empire, and that endless bullion meant endless power. What it failed to understand was the fundamental rule of economics. Value is not in what you have, but in what you produce. Spain's newfound riches came not from productivity or innovation, but from plunder and extraction. The empire had no reason to build industries or innovate, it could simply dig wealth from the ground. The crown taxed its colonies heavily, and the galleons kept coming. But money that is not earned corrodes discipline, and money that is not reinvested corrodes economies. Spain was soon about to discover the true price of easy riches. By the mid-1500s, the influx of American silver had begun to change Europe's economy in ways no one had ever seen. Prices across the continent began to rise. The more silver that flowed in, the less it was worth. This phenomenon, the first great inflation in European history, became known as the price revolution. While Spain's rulers celebrated their growing treasure, the purchasing power of that treasure was collapsing. A loaf of bread that once cost a few maravedis now cost double or triple. Salaries lagged behind, and the people suffered. The crown's wealth was an illusion, a glittering mirage dissolving in an ocean of silver. Spain's rulers were not blind to their growing expenses, but instead of restraint, they turned to expansion. The empire's wealth fueled its ambitions, wars against France, against the Ottoman Turks, and against the Protestant powers of Northern Europe. For King Philip II, faith and empire were inseparable. To defend Catholicism and royal power, Spain fought on multiple fronts, from the Netherlands to North Africa, from the Mediterranean to the New World. These wars drained the treasury faster than even the silver galleons could replenish it. The Spanish monarchy borrowed heavily from Italian and German bankers, pledging future shipments of silver as collateral. Debt, not treasure, became the foundation of Spanish power. And as the debts mounted, the illusion of wealth deepened. Spain was living on borrowed time and borrowed money. By the 1570s, the signs of strain were everywhere. The crown defaulted on its debts multiple times, forcing creditors to accept new bonds and lower interest payments. Each time, the cycle repeated. New wars, new loans, new defaults. Spain had become the first global superpower financed by perpetual debt. Meanwhile, the domestic economy decayed. Spanish agriculture withered as silver imports made foreign goods cheaper. Skilled artisans migrated to more stable economies in Flanders and Italy. The Spanish economy hollowed out from within. The empire's obsession with gold and glory left it blind to the quiet strength of its rivals. In England and the Netherlands, merchants and bankers were building something new, not a treasure economy, but a productive one. While Spain hoarded bullion, the Dutch built ships, founded trading companies, and established financial institutions that turned commerce into capital. The English, inspired by a similar ambition, laid the groundwork for a maritime empire based not on silver but on credit and trade. Spain's mistake was simple but fatal. It believed wealth was a thing to possess, not a system to manage. As the empire reached its height of glory, the seeds of its decline had already been sown. The treasure fleets of Spain became legendary floating banks carrying the riches of half the world, but they also became irresistible targets. English privateers, Dutch corsairs, and French pirates turned the Atlantic into a battlefield. Each intercepted galleon was a national crisis. Each lost ship meant not just treasure, but the loss of collateral, the very foundation of Spain's credit system. The crown's finances grew more desperate. Taxes on its subjects rose sharply, crushing peasants and merchants alike. To protect the flow of silver, Spain spent even more on its navy, its soldiers, and its bureaucracy. The more it tried to defend its wealth, the faster that wealth evaporated. In the 1600s, Spain's once dominant empire began to fracture. Inflation devoured its economy, debt consumed its treasury. The silver that had made Spain rich was now destroying it. Historians call this the resource curse, when an abundance of wealth leads not to prosperity, but to dependence, corruption, and decline. For Spain, the curse came in the form of silver. The constant influx of bullion made real reform impossible. Why build industries? Why invest in education? Why improve productivity when ships full of treasure arrived every year? But the treasure did not last forever. As silver production slowed and wars continued, Spain's income fell while its expenses grew. In 1607, the crown declared yet another bankruptcy. Spanish coins, once the envy of the world, began to lose their value. The economic collapse was mirrored by political decay. Spain's vast empire became impossible to govern effectively. Corruption spread through its colonial administrations. The once mighty armadas were crippled by mismanagement. And while Spain's rulers clung to the illusion of divine wealth, their rivals were transforming the global economy. The Dutch created the first modern stock exchange in Amsterdam. The English established the Bank of England, a financial institution, capable of funding wars and trade through disciplined credit rather than treasure. The very silver that Spain had mined was melted down and recast in the mints and markets of its enemies. The empire's wealth became their foundation. Spain, once the richest nation on earth, was now a debtor to those who had mastered what it never understood. Money is not power, control of money is. By the late 17th century, Spain was no longer the financial center of the world. Its fleets were smaller, its merchants poorer, its government perpetually in debt. The empire that had once seemed eternal was now fading into the background of European politics. But the lesson it left behind endures. The story of Spain's fall is not just a tale of kings and coins. It is a timeless warning about the difference between wealth and value, between money and power. Spain confused treasure with prosperity. It treated silver as an infinite resource, assuming that as long as it could mine or seize more, it would remain strong. Yet true strength, economic, political, and even moral lies not in the possession of gold, but in the systems that manage it. The English and Dutch understood this truth. They built banks to manage risk, companies to distribute capital, and laws to protect commerce. They used Spain's own silver to fund revolutions in finance and industry that would define the next 4 centuries. Spain's story mirrors our own in unsettling ways. Today, nations create money not by mining silver, but by creating debt. Central banks print currency from nothing. Governments spend beyond their means, convinced that they can always borrow more, inflate more, or tax more. But the pattern remains the same. Easy money breeds complacency, and complacency breeds collapse. Spain's golden age was not undone by its enemies. It was undone by its own misunderstanding of money. It believed it could buy time, power, and loyalty with treasure. But when the flow of silver slowed, the empire crumbled. The real wealth of a nation then and now lies in productivity, innovation, and trust. Silver and paper can vanish. Systems endure. The story of Spain is not just history. It's a mirror held up to our present world, one drowning in debt, dependent on printing presses instead of mines, and still mistaking abundance for strength. In the end, every empire falls for the same illusion, that money itself is power. But power, like wealth, comes only from what endures skill, production, discipline, and wisdom. Spain's empire was built on silver. It collapsed under its weight. The question for us is simple. Are we any wiser now?